why would they sell at this time? It seems like a really strange time to be selling Bitcoin, given that we're, to my mind, still in the relatively early days of a bull market. Surprisingly, what it seems to have done is it seems to orange-pilled all those people.
In the US, we have the Black Friday sales right after Thanksgiving, and people stand in line at 6 a.m. to go save money on electronics or whatever. But when financial assets go on sale, we don't think about it like that. We're like, oh, I don't want to buy it now, it's on sale.
Yeah, I mean, it's really a bit of a trap with Bitcoin because people will...
All right, Adam, we're here at the Bitcoin conference. You're like the OG Bitcoiner. First of all, I want to dig into like some of the big excitement that we have going on with the Bitcoin treasury companies. I know you're all about that right now. There's a lot of things that you're doing in that space, but how far have we come in the last 15 years?
Yeah, well, I think we got a kind of growth spurt in terms of metrics since, the last, well, I guess the spot ETFs was a big one, but that was by the courts. So It wasn't like the SEC approved it willingly. But now with the current administration, they're more open for business. And so I think we kind of got a lot of metrics caught up with where they would have been without that friction over the last few years. So, the regulatory environment for the traditional custodians of shares are now cleared to, custody Bitcoin. They got some work to do, but they're able to do it. And more of a wave of financial institutions offering Bitcoin-related products. Because those things take a while to land because they will say they're going to do it, but then they're going to spend months figuring out the guidelines for their advisors and what allocations they can advise and things like that. So probably in market terms, going to land in the, short, the next 6 months or something in some of them. And confusingly, the price is only 110,000. It feels cheap with the context, right? Because, we got to 73,000 before the halving, 73.5. It's not that much higher. And the amount of positive news announcements from financial institutions or from wealth funds, the ETF inflows, all of these things are enormous. And between MicroStrategy alone, that's 2 times the mined Bitcoin per day since the halving. And BlackRock, I bet another 2 times. There are traders on Bitfinex at times absorbing 1 or 2 times more, depending on market conditions. So it's sort of buying if it falls back. And somehow the prices, question is who is selling?
Right.
Like, why would you, and what's going in their head? Why would they sell at this time? It seems like a really strange time to be selling Bitcoin, given that we're, to my mind, still in the relatively early days of a bull market with all of the metrics, running really hard. So one of the on-chain metrics where people try to guess based on, which age UTXOs they see moving, it's an indicator. It's noisy, but it looks like some people have been holding Bitcoin for a year and a half, 2 years. So maybe they bought in the previous bull market around the 60,000 mark. Perhaps they didn't enjoy watching it dip to 15 and a half.
Yeah.
And so they're like, okay, they're selling capitulated. And so maybe that's going on, but whoever is selling, there's a lot of buying. They have to run out of coins to sell sooner or later.
Yeah.
So I think that's when it gets interesting again. I mean, we're saying it's not very high, but I mean, we just had an all-time high in the last week a few times, right? So it's on the move again.
Yeah.
Still.
Yeah. I want to dig more into those metrics and some of the things that you're working on and where this is all going. But if we go back a little bit, so to the point that you're making, right, we have this big pivotal shift in politics. And I think what you were saying is maybe the industry as a whole, maybe Bitcoin as a whole was sort of almost suppressed potentially by this political environment that we had.
Yeah.
And now it's sort of got some catch up to do now because the political winds have changed.
Right.
Right. So that's happening and there's enormous buying, but of course, as I was thinking, you said it, that means people are selling as well.
Somebody's selling, yeah.
Right. And so, I see there's a lot of people, and you're the original like cypherpunk. And so I see a lot of people online saying, but Bitcoin's losing its cypherpunk roots, and now it's going corporate, and now everybody's begging for the government to buy it, and these types of things. What would your response be to that?
Well, I don't really feel that because the question is when new people come in, what is their mindset and what do they learn from participating in Bitcoin? And so if you go back a few years, people were not sure. I mean, they would call it the suits coming, but the professionals, the asset managers, the advisors, the wealth management companies. So, are they going to absorb the ethos and politicians and so on, and dilute it basically, right? So you could have a financial success, but get quite diluted in terms of its mission, its ethos, as kind of permissionless global money, right? Which is a pretty radical thing, and surprisingly, actually, what it seems to have done is it seems to orange-pilled all those people. So, you have politicians who are clearly up to here in terms of personal Bitcoin allocation who actually get it. Now, it seems like we have a president who actually gets it too, right? And part of that was situational, that he got politically debanked,
Right.
And it clicked, right? And I think Eric Trump had specifically said that, the getting debanked made it real for them, right? So, and something similar with El Salvador, when they first started the Bitcoin thing, initially people were unsure, is it a politician sort of following a popular trend to get elected or to bring inbound investment or because it's a hot thing? But then it turned out that, actually he was patient zero in El Salvador. He was the guy that was like pushing it, and the Bukele's actually got it in a big way, right? So what it seems like is that the sort of incentive alignment of hard money, it brings wholesome incentives to all kinds of situations, is scaling much better than we might have worried in terms of, initially mining and trading by individuals, and then, private companies, and then public companies. And, the ethos is doing well. It's just in a scaled way. And the incentives are holding together in terms of, securing the network and the balance of economic incentives to participate in the market and in mining and in building products and services on Bitcoin. So surprisingly, so far it seems to scale all the way, and there's a couple more levels to go because while there are a few sovereign things, like the Swiss National Bank has some exposure by MicroStrategy. I think about 1% of their US equities in MicroStrategy, and that will change over time. Presumably. And Abu Dhabi Sovereign Wealth Fund, Bhutan, El Salvador, and some others. But those are actually quite small percentages. Another indication of institutional interest levels is somebody went through the BlackRock IBIT filings, and they could see of the people that are obliged to disclose, about 33% was institutional ownership. But nevertheless, that's a nice number. And I would say the other ETF holders, where an ETF was a simpler interface, is sort of accessibility, right?
Yeah.
So for the crowd that when they want to make an investment, they call their financial advisor, they call their broker, and they couldn't do it before. Or then the futures ETFs are not attractive products, right? So I would say that is the sort of top 10% of wealth in the US minus the top 1%. So not the super high net worth, but just professionals, the doctors, dentists, business people with a portfolio that they're taking an interest in.
Yeah.
Maybe have somebody else manage, but have some input into it. And it's not new money. They're just reallocating something in a portfolio. So I think the fact that they are they're reallocating in a portfolio, and they're longer term investors, it turns out. We didn't know what to expect, but they're also quite long term investors. So it's a good type of investor to have, because they're not going to panic sell when it drops 5%. Right. If anything, they might buy some more. Right. You saw that in some of the metrics. So that's interesting to see evolve. It means the money multiplier, like how much capital needs to come into Bitcoin to push it into a next layer, as less. So, you get higher multiple on the market cap versus the money in if you have these kind of investors. That's interesting to see.
So if you have stronger hands coming in, more patient buyers, so the point I think what you're making earlier was who's the sellers, and the sellers are people who probably bought around the $60,000 level. They went through the bear market through 2022. They didn't like that.
Yeah, so they got fatigued, basically.
They got fatigued. They sold out. The markets moved from impatient to patient. Now we have the patient buyers, sovereign wealth funds who are thinking generations ahead. So then a lot of this Bitcoin goes into deep, dark, cold storage, hopefully. And I think that then I guess the point you're saying is that when we have that shift of short-term buyers to long-term buyers, it removes the amount of available circulating Bitcoin.
Right.
And when that happens, then it takes less money coming into the market to get a higher multiple off of that.
Right.
And so then while most people would think that as the market cap of Bitcoin gets bigger, the volatility goes down, maybe what you're saying, possibly we still have the upside potential, but it limits or dampens the downside?
Yeah. Yeah. So Blockstream recruited this hedge funds manager, and he had Sean Bill, and he had a period where he worked on pension funds. So we went to talk to some pension funds the last couple of weeks, the fund managers and the fund administrators, to see what it takes to get them off zero. They're still quite early in their thinking. They're asking very challenging questions. But one of the graphs that Sean assembled is a kind of volatility distribution, which shows that Bitcoin has a fat tail to the right, which say it has like high volatility, but it's biased to the upside and
asymmetric.
Yeah. Whereas, the US stock index is more a normal distribution. They got down and up. I mean, there are downsides too, but the upsides are bigger, basically. Yeah. So that's an interesting data point. I think that, they call it redistribution, right? That, previous generation people sell. Ultimately, it's a story of Bitcoin's market behavior is, the dips exist to transfer Bitcoin from weak hands to stronger hands. So it's kind of evolution, like biological evolution. The people who for some reason are stubborn or persistent or value investors end up the winners holding the Bitcoin. Yeah. People that are, new to investing or can't stomach volatility, they get shaken out because it is a wild experience, even for somebody with some equity investment experience, because the volatility is just much lower in the equity world.
Yeah.
But I think it is, you can see over the long term that the volatility is dropping a bit in Bitcoin. I think, these kinds of investors who are managing a portfolio, they can reallocate. I think the message that Sean brought to the pension funds, he was managing the first US pension fund that put Bitcoin on a balance sheet. This is an Aclara VTA, and he was recommending around a 2 to 3% allocation, with the argument that, if Bitcoin halved, they could make it back in a couple of months with their normal, fixed income diversified strategies. And that, under his administration, that pension fund did quite well. They achieved a 10%, slightly over 10% return for 10 years in a row, which is good. It's a good, top quartile return for a pension fund. And if Bitcoin did what it did in the past, so, when he started talking to them, Bitcoin was 7,000. By the time we got the allocation in, it was 17. So we're already quite a bit up from that. And that allocation alone would fill in the remainder of their unfunded pension liability. So, but typically those funds are doing rebalancing every quarter. And a key thing with this allocation is you are trying to capture the asymmetric upside. So you make a small allocation to manage the volatility risk. Pension funds don't like drawdowns, right? Because they want a particular period. But you've got to not rebalance it. You just give away the upside quarterly, right? So
not rebalance.
Not rebalance the Bitcoin. Let that run for,
So rebalance the equities, but let the Bitcoin continue.
I mean, they do rebalance the equities, and they're in different sectors, so they'll be in some forestry or some farmland or different times of there. It's going to diversified, and they'll monitor those segments and rebalance. And they've statistically shown that helps the portfolio, right? But with this thesis with a Bitcoin, you're going for the asymmetric upside, rebalancing for that specifically, it's bad idea.
Right.
Just stay the course.
Yeah.
Keep it 5 years at least. And historically, if it repeats, it'll do well.
Yeah. Yeah. Let your winners run. Like let that thing go. You've been here since the beginning, so you've gone through some pretty extreme long drawdowns.
Yeah.
So you've seen that. You know, I started buying around 2015. So I went through the, 2018, 2019 drawdown, and I remember thinking, oh man, why didn't I sell? Is it ever going to come back? And
right.
It did. And then I remember in 2020 when it plunged with the COVID crash, and I'm like, oh man, this is it. The markets are done, and then I never sold any. I didn't buy as aggressively as I should have on the dips, but I managed to hold through. And I sort of become numb to the rise at 110 because I don't want to get depressed on the crash either.
Right.
How have you managed to kind of think through that on the euphoria and then the crash?
Yeah, I mean, actually, of course, it depends on people's background, right? But the average person is not self-managing their portfolios. So then, when they get into Bitcoin, it's their first trading or first self-managed investment.
Yeah.
And it's a wild introduction to investment. So I was lucky to have, in the early early to mid 90s, I was managing my own savings and trading with E-Trade in the UK equities market and an IPO and different sectors, stock trading, bit of a day trader basically. So I was kind of new to it, amateurish, and but you get to learn, to handle the roller coaster of the market volatility, and you're buying individual stocks, so they can move dramatically, even if the index it doesn't so much. And
but even then, as a trader, you are buying and selling, so you're not really sitting through the volatility.
Yeah. So what basically I learned the hard way. So I was doing that, and the market was rising. So you couldn't go that far wrong, basically.
Yeah.
And so I did the day trader thing, but then the market got into a bear cycle. So I was like, oh, I don't like this. But I was stubborn. I didn't want to realize a loss.
Yeah.
So instead I got more sort of scientific and started looking at, why would you want to hold this individual stock in a bear market? Because, people need healthcare, they need banking, and just start paying attention to the fundamentals, looking at the company specifics, and changed my outlook to be more of a value investor.
Okay. And
eventually the market came back and it was fine, right? So I got my introduction to the trading thing there. And so when Bitcoin came along, I was like, wow, this looks fun. Let's trade this, right? Yeah. But you learn really fast. It's so at the beginning I was thinking about trading it, and then I realized well, wait a minute, it's going up exponentially, but it's highly volatile. It's just 2013, right? So I was like, well, logically, if you were selling, if you're selling, what you're saying is you're hoping it's going to fall so you can buy it back lower.
Right.
But if it's going up exponentially with high volatility, the odds are stacked against you a really bad casino rig. So probably that's a dumb idea. So then I can okay, let's just buy more and not sell if you can. And if you want to trade, maybe pick an allocation and try to buy when it falls or something like that, right? And so and I think along the way, somewhere in there, my benchmark shifted. So originally I was in some mixture of pounds and dollars and euros and things. So I was working internationally, and I gave up worrying about the forex. I was like, okay, I've got a basket of currencies. Who cares what happens to the British pound versus the euro versus the dollar? And then so I basically realized that, well, actually I was starting to care more is the number of Bitcoin I have going up, not the dollar value of it. So I kind of redenominated in my mind the portfolio value to Bitcoin. And then it's a lot easier, right? Yeah. So if you just sit through a bear market, it's I managed to buy a little bit more Bitcoin. Right. Price was lower. This is good. Yeah. Right. And one Bitcoin is one Bitcoin became kind of a thing, actually. I really didn't care because I was convinced, just volatility, it will come back in the next cycle. But to your point about, the COVID drawdown, that was pretty dramatic. And as the previous one. I mean, they go back further, right? I didn't get active until 2013, but the one I got to experience first was the run up to 1300, and then it gradually fell to like 300 and 200, and it dipped below 200, which I think was a kind of previous psychological number that it achieved. And people did not like that. They were like, "Oh no, it's fallen off the 200." That was like their kind of floor, right?
Okay.
And it fell off, and like, oh, it's all over. It's going to zero. But it only lasted for a day, and so at that point, I was like, "Well, it feels pretty scary, but I guess this is the moment to buy some more."
Yeah.
So I actually managed to do it. So it was good, and I called somebody who'd been sitting on the fence about, "Oh, maybe I should buy some Bitcoin." I was like, "Do it now if you're going to do it."
Yeah.
And they did. So
yeah. It's crazy, in the US, we have the Black Friday sales right after Thanksgiving, and people stand in line at 6 a.m. to go save money on whatever, electronics or whatever. But when financial assets go on sale, we don't think about it like that. We're like, oh, I don't want to buy it now, it's on sale, which is sort of a strange.
Yeah, I mean, it's really a bit of a trap with Bitcoin because people will oscillate between, they'll see a price target, it's 110. So, it got to almost 75 not very long ago. I'll buy it when it gets to 75.
Right.
And it probably will never happen. Or if it does happen, they'll get scared again.
Right.
Oh, maybe it'll fall to 60.
Right.
I heard scared now. Is 75 defensible? And so they get stuck in this kind of psychological trap. So, you can look at different ways, but dollar cost averaging is kind of a way to do something in the middle, right? Buy some lump sum, dollar cost average, and you won't feel bad. Yeah. And I think also newcomers don't really have a view of the market cycle timing, because I know it's, there are not that many samples, and the last cycle had an extra all-time high right at the end of the cycle, which is unusual. But
now, you said earlier that given all the news that's happened, you feel that 110 is cheap, 110,000 is cheap. Most people that I listen to, not here at this event, but most people, they say, well, Bitcoin is too expensive. So they're looking at in the past, well, it's not $10 or $1,000 or 10,000. Now it's too expensive. You're thinking it's too cheap.
Yeah.
Because you're looking in the windshield, not the rearview mirror, right? Looking at where we're going.
Yeah. Yeah. I mean, I think, one way to, I was just looking at, the relative price at 69,000 previous bull market, or 73.5 in the second top last cycle. And the fundamentals, like the news flow and the fundamentals at that point, everything is just much, much better now from the fundamentals. And the consistent buying, there are less new coins being mined, coins on exchange are shrinking. So, yeah, I think the price should be much higher.
Yeah.
And I'm guessing it will get there sooner or later, because the sellers will just simply run out of coins to sell, or they'll get their mojo back and decide that, wait a minute, it's taking another run. Let's buy it back at a higher price. That's what people do, right?
Yeah.
So
Yeah.
they sell them and like, oh no, it's going up. And
everyone knows they're supposed to buy low and sell high, but they all do the opposite, right?
Right. And the other thing I think it's a nice thing to look at for people to deal with volatility and to think about it is there's a metric, the 200-week moving average, which is the 4-year average price, basically. And that is a really nice number because it never falls. It's always going up, slowly or fast, depending on the stage of the market. And it's generally a floor price. Like Bitcoin, for many years, never closed a month below that price, even in a bear market. During COVID, it closed a little bit, but, in a bull market, it's nowhere near it. And that number is creeping up. And I think at the moment, it's like 47,000. So we're somewhere between 47 and 48. So if you think about that as a potential floor where Bitcoin's unlikely to fall beneath that as your kind of bankable value, and then everything above that is volatility. Yeah. Then you can be calmer about, and if you keep that as your anchor, then you won't get so, it won't feel so dramatic when it drops 30%. Yeah. And I think the other thing that zoom out is a good thing, because people have nice charts of previous bull runs where there's been like 5 or 6 20 to 30% drops on the way to a bull market that's gone up like 100 times in a cycle or something. So, we had a 35% drop there from like, what did we get to, like 109 and then down to like 75, 74. So it's like 35%-ish.
About 30%.
Yeah, but I mean, it's normal, right?
Yeah.
I mean,
Going back to the 2022 dip, since then, I think we've had 9 pullbacks of 25% or more
yeah.
in that period.
Oh, yeah, okay.
So yeah, so it's just normal. I want to get back into some of these Bitcoin treasury stuff
Yeah.
and things that I know that you're working on. And sort of just taking that back. First thing I just want to address though quickly, you mentioned like the suits coming. This is the first time I've actually ever worn a suit at the Bitcoin conference. I'm using Mr. Black T-shirt guy. But the corporations are here, right? The suit, I guess I'm one of them now. But one thing that people think about is, unfortunately, the distribution from the decentralized sort of retail, people that came to it originally and now sort of transferring to the corporations, if you will, the institutions. You mentioned that it's people think that maybe they could change Bitcoin, but Bitcoin changes them.
Seems like it.
Seems like it, and I would agree with that. But do you see danger in it becoming too centralized? With all the corporations and institutions and the sovereigns coming in?
Yeah, I mean, I think, you can look at the fork drama, like 2015 to 2017,
It's the Blocksize wars.
Yeah, as an example where I would say that was resolved by the market. Going into, people were uncertain about what was going to happen. Some people thought the miners were decision makers or the exchanges or the developers, but actually Mr. Market made the decision and everybody
was which chain to go with.
Yeah. So and like now that we've seen that, okay, that seems reasonable now, right? You've got radical free market money. The market will resolve whatever debates there are.
Yeah.
And so with that precedent, that's good because it gives you the predictability. Next time it won't be as dramatic because you go, never mind. You just, short the futures if you disagree with it.
Yeah.
If the ecosystem guys. So I think, it was interesting to watch that because the activist investors, the people that were like, I'm not really sure what to do or thought it might be mildly good for companies in the retail payment space, if they're big blocks, they're like, it would be nice, but they weren't willing to like die in a financial battle, right?
Right.
And the guys that were, the early investors, the people it was really a mission for, they were kind of ferocious in the market and they were all in. And so, of course, they won. Right? That's what happens in a market, right? So, people sit on the fence. Their voice isn't actually heard in the market. Right? So I think that's one factor. And then, the custodian effects, because with the ETFs and the treasury companies are now companies that are fiduciaries for their investors, or in an ETF, the unit holders they're just managing the security of it, basically, right?
Yeah.
There's no kind of management discretion on there. So I think that they are, you probably don't want too much in the hands of professional asset managers because you want the activist investors who are looking at the network and, speaking up or trading if they see something coming off the rails. But I think ultimately, if one ETF or one treasury company try to pick a side in a future policy kind of debate, there is a feedback loop, which is people will sell their units and they'll buy another one, right? So if they lose their assets under management, if that drops to zero, they're out of business, right?
Right.
I think that'll make them, pay attention that maybe that's not what people want. So then that's a feedback loop, but I do think you don't want too much in ETFs. But, Bitcoin's distribution helps. And like I say, if people care about decentralization, buy some Bitcoins, cold store it.
Yeah.
Or take it out of the ETF. Now you can fix it, So in Bitcoin, you can't really sort of complain to somebody. You could do it yourself, right?
Yeah.
So if you care about something, buy in cold store. And of course, as you said, the people, the cohort that are selling Bitcoin from a couple of years ago, they're doing the opposite, right? Which is they're selling the coins to the sovereign wealth funds and to the treasury companies and the ETFs and the BlackRock. So as well as the ETF, BlackRock did something else interesting, which is they recently made like a position paper suggesting a 2% allocation for diversified funds, which is a helpful reference point for people like Sean who are making a similar recommendation in 2019. But now they can say, well, BlackRock also is saying something similar, right? So people will, in the finance world, will feel that BlackRock seeing it kind of covers them, as if that goes wrong,
Right.
or people will feel comfort that there's multiple people recommending it.
So then you don't see the centralization from the ETFs or the corporations as a big problem, as long as people continue to exercise their ability to vote with their money, I guess.
Yeah.
But
as long as it's not too extreme, I think it's okay. And it's providing a value to the market, which is making Bitcoin more accessible to a wide range of people. And, about the suits thing, now, I think there's a bit of a misnomer there, because people have a kind of simplified view of the world, but actually almost all of the money being managed by professional asset managers is money of individuals. It's their pension funds, their life insurance policy, it's managed like a mutual fund or some managed fund, right? And so, that is good for the individual. So, with the pension fund that got Bitcoin in there, that was actually the transport authority, right? So it's the policemen, firefighters, train drivers,
right,
all these guys who, they're going about their lives. They're not focusing on, manually investing. So if there's a Bitcoin in there and it improves their pension, it's good, right?
Yeah. Yeah, and I think there's also a aligned interest there as well. If you think about, whatever ETF or whichever fund, I mean, they want Bitcoin to remain valuable. Otherwise, they lose their business. And if you break the decentralization, then Bitcoin loses the value, and then they're sort of shooting themselves in the foot a little bit.
Right.
So from that standpoint, it seems like we're at least aligned economically to keep it decentralized and secure.
Yeah.
What about, so we have been having almost another sort of, not really a block size war debate, but there's been a debate going on recently about the block size. Was it the OpNet?
Oh, yeah.
The op return.
That thing, yeah.
And, expanding that, obviously, then there's like, well, how about we have a different, the knots, protocol taken off. How do you look at something like that? I mean, do you think that there should be something done, or you're also sort of the same thing where like, let the market sort of decide how that plays out?
Yeah, I mean, it's kind of side effects of a censorship-resistant, permissionless network is you can't stop people. They can do whatever they want.
Right.
They pay the fees. They can fill it with cat pictures if they really want to. Right. Now, that's kind of disappointing, because there's uneven wealth distribution in the world, and the best, sort of the hardest and strongest sort of asset protection assurance is from holding direct on-chain UTXOs in hardware wallet or something, right? So, outside of the Bitcoin space, your options are like offshore banking, maybe real estate in Florida, life insurance wrappers. There are more things that people do for asset protection purposes, and Bitcoin lowers the barrier to entry to that. And being able to protect your assets is a big deal in some parts of the world, right? So, ultimately, if in global terms, wealthy people having fun with NFTs and things are clogging up the chain with, the latest fad thing, they're effectively pricing out some emerging market people from owning a UTXO. So they're going to get to be, they'll have to do it in a less secure way, right? They'll have to use a custodian or something else. So that's kind of unfortunate. And of course, the thing that's creating that is it's hard to scale blockchain, like the technological limits, which people are trying to improve, but at the moment it is what it is. So, I mean, I think you can't really do that much about it. There are some kind of loose things in the network that make it more work to bypass the sort of anti-spam, like common sense limits in the network to keep the network healthy. But, it doesn't do that much, because they can use a miner, like a pool or a miner's accelerator API. They can bypass all the policy limits. So, and I mean, the other funny thing about the op return is that's not what people are using. They're using some other script, like Taproot script, because they get a 75% discount on the fees. Do that. So actually the op return is not being used for the images anymore. So the debate was kind of a little bit missold in terms of what it was about.
Right.
It's actually about some kind of layer 2 anchor transaction that was hitting the limit, which was, I think, 80 bytes, and they were like 128, so they didn't quite fit. And they didn't want to use an accelerator because they care about decentralization, because if their anchor transaction doesn't make it in, they could lose money on the layer 2. So they really wanted it to be standard in the network. So they did some other trick, which is uses up memory, so it's not ideal. Anyway, so I think still a little bit in progress, but probably they'll just do some kind of simple change to accommodate that. I think there's like a little bit of a blown drama, but I think the things you bear in mind is that you can't do anything about it, right? So it's a side effect of permissionlessness, right?
Yeah. Well, they're making a change to allow more of it.
Right.
Or Knots was then making a change to be able to censor it.
Right. Yeah. I mean, I think the debate is because even, there's two types of rule in the network. One is a sort of node policy or miner policy. And that, the node can say, well, I don't relay that, or I won't mine that. But there's the actual consensus rule, which is the rule that matters for whether a transaction or a block is valid. That one you can bypass you can get to that one by going directly to a miner or to a pool. And so even with knots, people can still bypass it. And that's what they're doing, right?
Yeah.
So it's not that, I think the problem is people are annoyed about the spam as they want to fight back.
Yeah.
And so why don't we do this? Even if it's not very effective, they want to push back, right? Yeah. And then the other counter argument is, well, it doesn't, people are already bypassing it. It won't really have much effect. So you get this kind of, no clear strategy is going to win.
Yeah.
An arms race type of thing, right? So it's kind of a bad trade-off.
I don't have the technical detail, technical capabilities to really sort of understand it, but I sort of look at it in the same way, which is sort of like the free market can sort of win. And like right now, the block space is pretty empty.
Yeah.
And if economic transactions aren't more valuable than spam, then that's a problem.
Yeah.
And if someone's willing to pay for it, is it spam? Because then you're trying to say someone else's value is not valuable.
Right. Well, I mean, yeah, I think the free market does resolve it in a way, because there are times when the Bitcoin transaction fees are very high, and then they don't want to,
right.
They get pushed out, right? The use cases get pushed out. And so I think the network kind of oscillates between low and high fees. So probably, when there's a big run up in Bitcoin price, the traders tend to push the fees up because they don't really care what the fees are, because they're paying maybe 10 basis points to an exchange commission, and the fee is nominal, and it's irrelevant, and they want to get in the next block because they're trying to trade. So they'll just say, what's the fee? And they'll just pay twice as much.
Right.
And then they'll just push the fees up.
Right.
So that's really the driver, but it goes through cycles. So yeah, I mean, I don't know. This was just normal drama.
Normal drama.
I mean, the treasury company angle is an interesting trend as well. There was an event a couple of days ago here, first day of the conference, where I had a number of the treasury companies speaking, like panels and stuff, talking about their company experiences. And apparently there are at this point 80 such companies globally of various sizes. If you ask them to name them, they'd probably only be able to name like 5 or 10, right? Yeah. But there are apparently many more in different parts of the world. So it's a growing phenomenon. And then as an effect, it's been something people are grappling with. So people from a Bitcoin ecosystem, like Bitcoin holders, some of them are skeptical, like, well, why can a company charge a premium above the Bitcoin price? They'll say, well, why are you paying $200,000 for a Bitcoin inside this company? And the traditional finance people who are used to valuing companies based on cash flow, some of those are also confused to say, well, why isn't the value of the Bitcoin on the balance sheet, the net asset value, like one multiple, right? Plus the enterprise value. And so these things some people are still getting to grips with, and I've been, involved in trading them for a few years. I got interested in sort of supporting MicroStrategy early on because, initially they just took their investment to protect against inflation of eroding their half a billion cash reserves from the company. And during COVID, they were worried that it was just shrinking at 10% a year and there's nothing they could do. The treasury rates were really low. So they hit on the idea of using Bitcoin, but after that, they turn around and kept buying more and more, right? So it started this sort of exploration of phenomenon. So I invested in it partly because I wanted to support what Saylor was doing, which was he was sort of trying to orange pill the corporate world, like the company world, to using Bitcoin as a reserve asset, a company reserve asset. And, then when you are trading those things, you try to figure out like economically what's going on. And, by buying it premium, you've got a form of, if you're a value investor, which is my outlook, you'll want to feel that that premium is defensible. Like, why is it there? Is it going to hold on to that premium long term, or is it going to collapse?
Right.
Is it like a bubble and it's going to collapse? And so the way I was able to, persuade myself that it's safe to invest in a 2 times premium is, you can look at it historically, like it bounces between, I don't know, maybe 1.5 and 3.5 in a bear market, but it's a bull market, and maybe between, 1.5 and 2 and 3, in the last 6 months, probably. And so you can look at the range and say, well, it's lower than the middle of the range, so you could buy some. But that's just
cheap or expensive.
Yeah, I mean, that's just like looking at the market. But then this should be like a fundamental reason. Why does it even have a premium? And so I think there's a reason, which is that it's generating yield. So not in a normal interest sense, but they are increasing the Bitcoin per share and annualized rate. And in 2024, MicroStrategy achieved 73.5% increase in Bitcoin per share. And in 2025, year to date, it did some more. So it's over 2 times from January 2024. And so my argument is, well, if you would bought MicroStrategy in January 2024, it's now paid for that risk. Now it's,
that's the days to cover metric.
Yeah. So that was the kind of, that thinking was the genesis of that. And I tried to put like a calculation on it. Well, what are you really saying? Well, it's just how many months, how many days does it take until the yield catches up with the current MNAV? And so you can look at that historically and say, well, in MicroStrategy's case, it was about 18 months. So it's moving around quite quickly, right? So if you buy it and you think in 18 months, there's more time to run. Because like the other part of the thinking is that when Bitcoin is fully adopted, it reaches this, how Finney's 2009 Bitcoin could be addressable market, 200 trillion. I think we're starting to see that becoming much, much closer to reality. And so in buying this, and I think once Bitcoin does get there, the treasury strategy doesn't work nearly as well. Right?
Okay.
Because we're mostly, but the effect is mostly an arbitrage on the fact that Bitcoin is increasing by adoption very rapidly in 4-year periods. But once it's fully adopted, it doesn't have, the dollar value won't increase that fast. It'll be more like an inflation hedge, right? So my thinking is just conservatively, maybe it will do better, but conservatively, let's assume that the MNAV drops to 1 once that's happened. Maybe that's in a couple of decades, how long it takes. So the conservatives like, let's say it takes a decade, it'll drop to 1. So if you're buying at 2, if it doesn't achieve any yield, you're going to lose half your money by maturity rate in Bitcoin terms. But that adoption is not going to stop now in most Bitcoiners' opinion, right? So you say, well, if it it continues its adoption and it reaches this level, there's like 100 times Bitcoin price appreciation between here and there in a few market cycles. So probably you will get it will cover the 2 times MNAV in the next year or 2, and then you're covered, and the rest of it is upside. So we get Bitcoinization.
So the markets are discounting mechanisms, right? So we're trying to buy something cheaper today than it will be in the future. And so what you're saying is, even though the MNAV, we're paying more for the Bitcoin today, at the rate of their continued appreciate or acquisition of more Bitcoin, then it'll cover, and then we'll be in the positive in the future. So we are buying at a discount today based off where it'll be. But then we see that days to cover number vary quite a bit. So then why that?
Well, it's the market price is changing. So, that will directly do it. It's like a little bit of volatility, and it will, it will fall. I mean, at the moment, there's a short seller trying to short MicroStrategy, Jim Chanos, and a short seller.
Yep.
And I mean, he's not just straight out shorting. It's very dangerous. He is long bit. I mean, he's a dollar investor, but he's long Bitcoin and short MicroStrategy. So he's trying to compress the MNAV. I think it's bad timing because it was already low.
Yeah.
And of course, MicroStrategy is not standing still, right? They're buying more Bitcoin. It was 500,000 and that's like 580.
Right.
It'll be 600, soon enough.
Yeah.
And that is just adding pressure against Chanos's short, right? So I think he'll have to get out of the way sooner or later.
Yeah.
And then so that's that's kind of short term. There were a couple of other short funds that tried it. I think one of them went under. From it was Heisenberg Capital, and then Citron Research, and now Chanos.
Yeah.
So I think like at least one of them blew out by doing it. It's a very dangerous.
Yeah.
Doing anything short, shorting Bitcoin, very dangerous. Shorting MNAV also quite dangerous because it's elastic, as you just said. It can be 3, it can be 2. That's a big margin for a short, right? So you're shorting some kind of Bitcoin derivative effect, and it's all very volatile.
Which is not a lot different than traditional stocks with like a PE ratio that could go from 47 to 52 or something like that.
Yeah, it's quite analogous to PE ratio in a way, yeah. And then the other phenomena is that you see that different strategy companies have a different regime. So you can see that MetaPlanet and the Japanese hotel company one, they have a very rapid rate of Bitcoin appreciation. And the blockchain group, a newer one in Paris, it's a software company. It's AltBG is the ticker. And both MetaPlanet and AltBG are increasing the Bitcoin per share much more rapidly. And so, I was, their MNAV on MetaPlanet has been between 5 and 10, which is much higher. Right? The MicroStrategy is maybe like 2 to 3.
Right.
And so, in buying MetaPlanet at 5, which is lower end of the range, you kind of feel it like, well, that's a big multiple. Is it safe, or is it going to like fall to, 2 or 3 like MicroStrategy and it's overshot now, right? And so that was my kind of wrestling with like, should I be buying this, or is it already overblown, right? And so then I got onto the months to cover, and I realized that it's months to pay for that, even that big premium was about 3.3 times at the time, but they had doubled the amount of Bitcoin on a balance sheet in 1 quarter. So now it's a 16 times annualized.
Yeah.
So I mean, okay, maybe that's a short-term effect and it's going to average a bit lower, but it's really aggressive. And so their months to cover was only like 5 or 6 months. So when you look at it like that, as long as they keep something close to that track, buying at 5 times or 3.3 at the time is actually, relatively low risk. And so that is a useful, metric to think. You've got to overlay it with your risk perception of, will they continue? Is it repeatable what they're doing? Are they execution focused?
Right.
And some of these guys are like Saylor is amazing at execution.
Yeah.
Just when you think he's done, he finds another billion from something else. Right?
Or 17 billion.
Yeah. So never bet against Saylor buying more Bitcoin, basically, is the message that they have delivered repeatedly to the markets. People are like, okay.
Yeah.
But Chanos is giving it a go, so good luck to the guy.
And what about AltBG? So what we're seeing also now is Saylor sort of created this strategy, the name of the company, and now he's giving the strategy to other people and they're following it. And then we're starting to see different versions of it, variations of it. So AltBG is doing it more on a bit bond.
Yeah, actually, it's quite innovative what they've done. So, I mean, I think sometimes what people are doing is because the market, the available market raising mechanisms are different in different jurisdictions. So, in the case of MetaPlanet, they're using moving strike warrants because they don't have an ATM, and it has a similar effect. Apparently, they don't have a lot of debt, so it's basically at the market. And in the French one, they did something interesting, which is it's a convertible note technically, but it's a Bitcoin basis one. So the interesting thing there is they don't really have a debt ratio, because what they'll do is they will accept Bitcoin in kind, or you could send in euros and they'll buy Bitcoin. And and you have like with other convertibles, there's a conversion premium. If it goes up 30%, then you have the option to convert. And if it reaches maturity and it doesn't reach the conversion premium, they don't really have a credit risk because they can just give the Bitcoin back. And then they put the Bitcoin in a separate special company, ring fenced, and in custody of an independent custodian. And so they can actually sell a lot more convertible notes. So, with the euro or the dollar basis convertible note, the company is sort of moderating how much debt ratio they take on. And, MicroStrategy has said they want to keep it no more than 20 to 30% leverage, so 1.2 to 1.3. And of course, they can moderate it, right? They can build the leverage ratio up to 1.3, but then they can sell some shares at the market, which reduces their debt ratio, and then they can do it again. So they kind of oscillate.
Yeah.
But in a alt BG particularly, because they're recent and they start small, they, if that was debt, their debt ratio would be enormous. But because it's not debt, it's fine.
Right.
So it enables them basically to move faster because they have, so basically they have a debt instrument that doesn't create a debt liability effectively, right? With a conversion. So that's pretty interesting. Now, of course, the Bitcoin and the MNAV, if that eventuality happens, would shrink, right? Because they'd be giving back Bitcoin that people have thought was part of the formula. But nevertheless, the situation, the scenario in which a treasury company would have to repay debt is that Bitcoin is lower in 5 years. They're generally trying to target 5-year bonds,
which is a pretty good time frame.
Yeah, so most Bitcoiners are like, "Oh, I'll take those odds. That's unlikely, right?"
Yeah.
But if it did happen, it might be painful for the company to refinance, right? They might have to sell shares very dilutively. If they sold Bitcoin, it would definitively be at a lower price. And so it would be painful. And so then it brings into the question for the lender, well, that's the stress case credit risk. Can it pay it back?
Yeah.
Right. And what MicroStrategy is doing is they're trying to double over collateralize to provide assurance. So firstly, they've got, average lower cost Bitcoin and a lot of it. But secondly, they're generally, selling, $1 billion of convertible notes and $1 billion of ATN. So they bought $2 billion of Bitcoin and they got $1 billion of convertible debt. So there's kind of over collateralization.
Yeah.
And then they're not doing it too much so that they don't create a debt ratio. But, the most of the people that are buying the converts in MicroStrategy are delta neutral, kind of arbitrage. So, they'll buy 150 million, say hedge funds specialize in this. They'll buy 150 million of the convert. They'll short 100 million of the stock. And what they're left with is a 50 million long dated call option. And they will do a kind of option yield strategy on that. And MicroStrategy is fantastically volatile, more than Bitcoin. So they can have a lot of fun doing it. When it reaches the conversion premium, they'll sell it and buy the next tranche.
Yeah.
And so, as they convert, the debt ratio is getting reset again. So it kind of sets a nice kind of sequence where MicroStrategy can bring more money in. These guys are bringing new types of money in that doesn't even care about direction of Bitcoin or even believe in it necessarily, right? But they can help bring the capital in. It's interesting.
How many of these types of companies do you think the market can bear?
Yeah, it's a very interesting question. So somebody I know in private banking, sort of wealth management banking, asked me this question. And I was like, interesting question. Like, how scalable is it? If Berkshire Hathaway and Apple and Microsoft plow in, will they compress the opportunity? And what I came to think about is, actually, no, it's enormous. It's effectively, it's an arbitrage between, the Bitcoin futures, 200 trillion, Bitcoinized financial markets, which I think of as not displacing the fiat currencies, but sort of sucking out the monetary premium and everything. There's monetary premium in the stock market. If you take out the empty monetary expansion, the stock indexes haven't gone up that much.
Yep.
And monetary premium in real estate, in art and other bonds, all kinds of things where people are trying to preserve their assets. So preserve their spending power. So if you take the 200 trillion, that is the size of the arbitrage, and then that's an enormous amount of money. So you can look at the treasury companies as one of the vehicles to arbitrage that future because they've got, while Bitcoin's going up,
Yeah.
they can bring forward corporate capital mechanisms and buy that at a discount. And their actions are also applying pressure to Bitcoin, probably bring that period forward. So kind of accelerate, hyper Bitcoinization, basically. So from that point of view, I think it's very scalable. And you can see that Saylor, was very relaxed about getting other people. He has an annual conference where he tries to encourage people and provide the playbook and explain the accounting rules he used. It's got a bit simpler now with the spot ETFs for companies to use those even. But, clearly he's not feeling it's competitive in terms of, for people who are doing an arbitrage, sometimes they're trying to keep it quiet because they know that it's not very scalable and if other people pile in, it'll disappear. But here it's an enormous dislocation. So it's like the arbitrage of the century, basically.
Well, and he's got 580,000 Bitcoin, and if everybody jumps in and pushes the price of Bitcoin up, he's looking pretty good, right? So,
well, I mean, I think there is an effect, which is that strategy is a bit indexed to the MNAV you can hold. So if you have a higher MNAV, if the MNAV is 3 rather than 2, when you sell shares or sell convertible notes, it makes it more accretive in Bitcoin per share per dollar in. And that's partly where MetaPlanet and OldBG have an advantage, which they have a high MNAV. And so when they do a corporate action, whichever version, it's more effective. So it's a little weird because it's kind of sort of self-reinforcing. It has a high MNAV. The high MNAV helps it keep a high MNAV because the corporate actions. So that factor is one thing that makes people skeptical, but they do need a fundamental to get it to the high MNAVs and earn it, like justify it and keep it, because they'll drop and then they'll come back.
Yeah.
So there is something fundamental there. So, but anyway, I think it's enormous. And so that's the scalability question. And the other one is sort of sustainable. Can these companies maintain their yield? Can they keep doing it, or is that just going to droop? And one theory for why it might fall is as they get bigger. If you take something very small, they can create a 50% return. Start with 1 Bitcoin, you can buy half a Bitcoin, and now they have 50% return in one shot, right?
Easy.
So that's true, but once it gets going and it's 100 million versus getting over 100 billion in Saylor's case, they have, I think their ability to raise is somewhat scalable with their size, right? Because, sort of the debt ratio, right? If they're both targeting a 1.3 debt ratio, 100 million guys, they can raise 30 million, and 100 billion can raise 30 billion. And Saylor is doing it. He is bringing in larger amounts of money in bigger chunks.
Yeah.
And, I guess the other question is do they start to exhaust the arbitrage players and the bond market, the competition, right? But those markets are very big.
Yeah. And
the convertibles are extremely attractive for those traders. They're the best, the best upside, the best volatility product on the market for their strategy. So I think ultimately, if it starts to become significant in that market, people are looking for yield. They'll reallocate from something else that's not very interested in the treasuries or fixed income or something, right?
Yeah.
So I think that makes it more scalable, but it could, it could cause it to be a bit harder to go big. But there is some advantage being big, which is they get into stock indexes that benefit from passive flows of people making regular savings that get dropped into like an index fund.
Right.
So I think Saylor is, with MicroStrategy, they're in one of those index, but there's another target coming up, which, they need a certain number of quarters of profitability and size, and they get in there. So they may get into it soon.
Well, let's, I mean, like I said, this is the most fascinating thing going right now. I love this learning new things and new terminologies. Let's wrap this up and talk about the potential for risk, because inherently this business model relies on leverage to grow. And of course, leverage is that double-edged sword, especially in a Bitcoin world where it's extremely volatile, both to the upside and the downside. So in order to do good in this strategy, I have to use leverage. And so that's number one. And then some people are naturally always going to take it too far, number two. And then on top of a volatile asset. So how are you looking at that, the risk side of it?
Yeah, I mean, it's effectively, it depends which approach they're using. So you can see MicroStrategy, they're quite transparent that they're learning, so they start with one strategy. So when they started, they used their treasury. I mean, firstly, they did a share buyback offer so that people didn't believe in it could leave. So they bought them back at premium. Most people stayed. They bought their first slug of Bitcoin with cash, and then they ran out of cash, plus or minus, right? And so the next thing they did is took a corporate bond. It's a long-running company with steady revenue, so they had a credit rating to bring in a big corporate bond. They built up a debt ratio, and so they were quite aggressive into their first bear market. So the price fell, they did more, right? And they actually they overcooked it. So, I went back and looked at it. I bought some of it in that bear market period, but I went back and looked at it in terms of how much debt they'd had versus the net asset value of the Bitcoin. And the debt got larger than Bitcoin for 5 months in a row. So if that was a leveraged position on exchange, they would have been liquidated.
Right.
So now it wasn't, directly margin callable. They had the equity cushion, had plenty of revenue to pay the interest on it. So they just, plowed through it. They did something tactically interesting, which is they had at the tail end of it, like a 200 million collateralized Bitcoin loan from Silvergate.
Okay.
And Silvergate started to suffer in the market and they needed liquidity fast. So they actually bought back their own debt at like a 30% discount of Silvergate.
Yeah.
So that worked out well.
Yeah.
But generally speaking, I think you can see that they've learned from it, right? Because now they are targeting the conservative leverage ratio. And they also cleaned up the callability, so there's no direct lien on the Bitcoin.
Right.
It's restructured things and they had, the negotiating power to do that. So it's in a safer position
But they're able to do that because of who they are. But what about all the new entrants that are?
Well, that's a very good question. So, there is a potential risk that some new entrants push it too far in like an attempt to catch up or, getting a bit too exuberant and pile on straight debt that then they have difficulty servicing in a bear market, where they get too high leverage. Now, some of them, like two of the ones that have a very high NAV actually have almost no debt, interestingly. So MetaPlanet has almost no debt, and OPG has debt, but it's Bitcoin basis debt. So the debt, if Bitcoin price falls, the debt shrinks. And so they never get into a kind of solvency issue with ability to repay, right? So, but yeah, you might see that in a bear market that some people have made some kind of over exuberant straight debt structures that could, So I think one of the risk points is people are looking at the big ones and saying, well, if MicroStrategy sold like 500,000 Bitcoin in the market, well, create a debt. I don't think that's happening because the debt ratio is low, and they got a lot of levers to play with, and a lot of the debt they have is convertible,
right?
And so they can, they're converting it as it reaches premium. So the debt that's left over when the market turns, which presumably will eventually, is it's manageable. Mm-hmm. And I think the other thing is, the average entry price into Bitcoin is like 65, some probably is gradually creeping up to 70. So they got some headroom from 110 level.
Right.
And, the floor price, this 200-week moving average, is also creeping up, right? 47. Soon enough, it'll be 50. So, and if that's an indication of, well, the market probably won't fall below that kind of region,
right?
There's a safety in that. But, past, history doesn't necessarily predict the future also, right? So, and if the phenomenon gets big, it could contribute to the market dynamics in a negative way, I guess.
Yeah.
Yeah. So, you just hope that the people that take the risk that goes wrong do it when they're small so they don't have an impact on the market.
Right.
Or the other thing that occurs to me is that, a bigger strategy company could buy them, if it makes sense.
Yeah. All right. Last question. Where do you see Bitcoin and this Bitcoin treasury strategy sort of being in 5 years from now in 2030?
Well, I think, because what I was saying about the scalability of the approach, I think eventually it will pull in some of the larger cap companies because, there is literally a fiduciary obligation to protect their shareholders' interests. And some of these companies are sitting on like $1 billion plus of cash or probably more, right? 10 billion or something.
Apple, billions.
Yeah, right. And so, realistically, with the M2 monetary expansion and the debt ratio in the major economies, we're probably facing, a decade or two of financial repression, which means that the inflation rate is higher than the interest rate.
Right.
And so if they have 10 billion or more sitting in US treasuries, they're just straight up losing it. Right. And so that's not, Warren Buffett would say cash is king and he's waiting for an opportunity in the market. And he's good at waiting for the bomb on the market to go buy stuff.
Yeah.
But in the meantime, why is he losing money on the cash, right? There's obvious alternatives. So I think, some of the sort of more technology focused companies with younger management will probably start to get there. You've seen a couple of shareholder requested votes for boards with Microsoft and Apple it didn't get passed, but the question is coming in. And there are Bitcoiners in there. I know some Microsoft people on the top management or on the board who are Bitcoiners, right? And so there are people around them that understand Bitcoin, have been at Bitcoin for a while, who would, try to explain it to them.
Yeah, for sure.
And they don't have to put all their cash in it, but
and they see what strategy's doing, so they're like, hey, we should probably do something similar.
Yeah. So I think they're missing a trick, and it's actually kind of surprising how few companies participate in the treasury company play. In that you could see that Saylor was, trying to lead the dance, right? This kind of dance floor phenomenon. One person's dancing, eventually everybody joins in.
Yeah.
And he's leading it. He's out on the bridge. He's on the maiden voyage of the flight to show it's safe.
Yeah.
Full conviction. It's contagious. So I'm like, this is great. Let's see some more.
Yeah.
And he's running the conferences and nobody's copying it.
They're coming.
They're coming now, but they're starting from the smaller end, the innovative end. But I guess there are a few public companies doing it. Just during the conference, there was one of the Trump media companies.
Right.
With Convert,
Yeah. Yeah, to the dance floor analogy, the one person dances alone for quite a while, and then
well, apparently it's now 80.
Right. So they're coming, and it just takes time.
Yep.
Great. Well, I think that's a good chance to cut it off. Anything you're working on that you want to draw attention to that people should be checking out?
We're just doing whatever helps to help Bitcoin reach its potential, reach the mission and objective of, involving more people in Bitcoin. Recent pushes into bringing the pension funds and endowments to get them off zero. So we brought Sean Ville, who had the inside experience of trying to get Bitcoin in there and the outside experience of being a hedge fund manager.
Yeah.
So trying to help them do it.
Get off zero. All right. We'll sign off with that. Thanks so much.
Thank you.